I need for everybody to pay attention for a few minutes on depreciation. And 6 of you are not here today. Soon Georgia, I see Georgia's oranges, so he'll definitely be back for his oranges. All right. Tracy's usually here, and Alex, will be back today. Caitlin, she's always live streaming. Caitlin, who's just here today. Who's the number 10? Who? Oh, yes, man. She may come waltzing in 2 minutes, but she may not. But, all right, let's look real quick. These are just some questions. I'll try to send it as a PowerPoint now, but it didn't earlier. But anyway, this brings out some points I want to bring out to you. Number one, if you can see it there, an asset held for personal use is not depreciating. We know that. It's capital assets that appreciate buildings and land and equipment and so on that we appreciate. Have to have in business. All right, goodwill is an intangible and you amortize it. It's like you do patents and copyrights. And since the cost of a customer list represents an intangible, its cost is amortized. Are you all on any of those lists? Any of y'all get, when you get any telemarketers even on your cell phone? You don't also? You don't get any telemarketer calls even on your cell? I started getting a few on many, but now cell phones, I don't think they're as private as they used to be. You can't get them. Now, some companies specialize in lists. I'm on lists for new car warranties and for health care. I have 5 or 6 bothers every day, and I'll take one to put me on the do not call list and don't help. Anyway, there are lists available for these telephone solicitors. All right. If the patent's useful life is 17 years, its cost is amortized over 17 years. But now look at this next statement. Since the patent has a defined or definite and limited life, the patent does not qualify for 15-year amortization because it was not acquired in connection with a transaction that involves the acquisition of trade or business. But in some cases, I'm trying to tell you, on a patent, if it's only going to be good for 8 years, amortize it over 8 years. That's what they didn't spell out here. Okay. Georgia, I told that we'd be back. That's wrong. All right. Now, land does not appreciate. We know that. It appreciates. It appreciates. It appreciates. Goes up and buy it. Okay. All right. A covenant not to compete is intangible and amortized. All right. If you have a business and you sell it to someone else, they may get you to agree not to compete for 5 years. Now, in the chiropractor business, my son signed on for someone else. He signed the covenant not to compete within a 10-mile radius if he ever quit there. Okay? So those covenants not to compete are for many businesses.
What does it include? Not to compete.
If you buy out somebody else's business, if you work for somebody, if you quit that firm, you may sign a covenant not to compete. Or when they hire you, you may have to sign that you cannot open up within 10 miles or 5 miles or for a year or whatever. And some businesses do this. Somebody sold out a body shop business down near me. This body shop fixes vehicles, paint them. And the fellow that sold it signed the covenant not to compete for a year or within 10 miles of that business. Okay? Those covenants not to compete are just smart business. 10-mile radius. You cannot open up in a 10-mile radius. So, okay, looking at a couple other questions. Depreciation deductions are not discretionary. The basis of property must be reduced by the amount of depreciation that should have been taken, allowable depreciation, if no depreciation was claimed. So, if your business does zero business this year, or let's say you put property in being in 2015, and you depreciate 2015, you close the business down for a year, 2016, and you open it up back in 2017, then you're on the third year depreciation. You lost depreciation for year two. But now on a home, when you depreciate a home, as long as you've got it up for rent, you may have zero income, and you can take all the expenses and have a net loss. The depreciation sometimes gives you a net loss. All right. If no method of previously been used, allowable is defined as the lowest possible method allowed by law, which probably would be straight lines. Number 3, the base of property converted from personal use to business is the lesser of its adjusted basis or fair market value. All right. When you put a vehicle into your business today, you pay 24. The fair market value today is 11. 11 is what you put in the business. It's fair market value. Okay. And even if you use it in another business, it does not matter what your book value was. Even if you use it in another business, your book value was 6 and your cost was 20. You still put it in a new business at its fair market value today, maybe 11.
But you record the gains.
What?
Gains, do you record the gains?
No.
No?
No, not when you start out a business. Now, if you transfer from one business to another, you may have to record a gain. If you're transferred from personal business, you don't record a gain. Personal to business. Now, number 4, you can see here is furniture, plumbing, land, trademark, goodwill, automobile, truck. Now, what I want you to look at, subject to MARS depreciation, we know land don't depreciate, so that's a big no. We know a trademark and goodwill don't depreciate, they amortize. We may have depletion. So some of these are common sense things. Now, recovery period for furniture, 7 years, plumbing, 7 years, land, none. Trademark, 15 years, and goodwill, 15 years, amortization. Automobile, 5, heavy truck, 5, machinery, 7, the building, used, and manufacturing, 39. That's the same as rental, commercial property. But here's what I want you to look at, this middle column. Can you get 179, 170.97 amortization? Yes and yes on these two. But I wanted to look at that other section, which I don't have up here. Section 170, 179, not 197, 179, what we got to look at. These questions are bringing out a few points, whether we read them or not. All right, if you got a book, open to question 5. Open to question 5. Let's see, Once has a book. And has a book. All right, Robert, you have a book? You have a book? Go here. Do you have a book, Ken? Huh?
I forgot my book.
Ken. Golly, you're at least a junior. Juniors don't forget. Slide back here and you and go look at mine. Okay, see it. It's like the county principals the other day. Most of my students, I said, you come, I'll be here at 8:30. Some of us here, but they wait about 8:45 to start teaching. Some start at 9. Okay, so 9:30 comes along when Trey started. So I had 3 young men, financial aid. Neither one of the three had a calculator. One of the three didn't have a pension. Now, I don't know who taught them responsibility. Some of you are dependent. And you're here, you don't use every reason to skip and things like that. But anyway, I hope they learn before they graduate. They need to be responsible. All right, number 5, I want you to go ahead and read that, Giorgio, to us.
Which of the following items are considered to be inventory for purposes of section 751? Supplies.
Now, are you in chapter 10?
10, yeah.
And what was that question? I'm not.
Which of the following items are considered to be inventory for the purpose?
You're on corporations. You better go back to, let's go backwards. And you're on corporations. Go to chapter 10, 9, in the bed. We'll start over again.
Robert is a sole proprietor who uses the calendar year as his tax year. On July 20th, 2017, he acquired and placed in service a business machine, a 7-year asset for $50,000. No other property was acquired in 2017. Robert elects out of bonus depreciation. What is the amount of depreciation allowed in 2017 and 2018? If section 179 depreciation was not elected.
All right, elected at price depreciation. So you go to table 1 and appendix C, and for the first year, you find it's decimal 1429, and for the second year, you find it's 2449. But now, how many years was this property for? What kind of property was it?
It's a machinery?
Machinery is 7 years.
Yes.
We have to look that up 7 years. Now, if he elected 179, he would deduct all 50,000 if he wants to. There'll be nothing left to depreciate if he wanted to. Okay? All right, everybody read number 6. Do a couple calculations on it before we look at the total solution. Read number 6, do the calculation necessary. Read number 6. Okay, I hope you've had time to read it. Have you found it yet, Giorgio, number 6?
Yeah, I read it. I'm looking for a table.
I would find those in the appendix. Appendix C, total in the back of the book. Now, there is a table in the chapter, I agree with that, but it's better to just go to appendix C. Y'all should put a tab or a bookmark or a pencil or something on the back there so you don't have it. Kevin, you were there, I think. And you're 424. If y'all found appendix C yet, it's more dependable to go back to the book like this one. Just go to table 1 in the appendix. page. That is your tax table. That's your tax table. Y'all found it. Okay, thank you, folks. See one. All right, so see ones, everybody found it. See Austin, they advertised it, found it.
Yeah,
Table one. Hey, that book on. All right, go to table. Now, asset number one. What was asset number one now that you've read it? What was it?
like 7-year property.
They'd say it has to be machinery. So you get that decimal 1429. Asset number two must have been 5-year property. What was it? A heavy truck or something?
It says property.
All right, that's 20%. Now that's 17. If you go to 18, the second year, that goes down to decimal 2449. It goes up really, and that goes up to 32. So you got to learn to calculate depreciation from the tables and get away from straight line, decline and balance, and units. We'll use the units on depletion. You know, that was a B part. B part's probably worth looking at. Goodrich can immediately expense under 179, 510,000. So a collective expense only part of the 1.35 million. All right. Now it is 7-year property. They can claim 50% even bonus depreciation for 2017. And that bonus depreciation, I don't recommend that. Now, what is the problem? Okay, Robert, do you see a problem with a company taking 510,000 plus their other bonus depreciation? And they come up with a total depreciation of 1,100,000. Do you see a problem with them taking that much depreciation in 2017? What? That's a whole lot. What does taking this million off in 2017 do to your income tax? It reduces your income, don't it? And it reduces your tax. But what do you have left for future years? When you write too much off of one year, you have very little left for future years. So you want a car to get taking all this off in the first year, unless you've got a plan where you're looking into the future or something else is going to happen in your country. Or you'll have more assets next year to appreciate. Don't just go writing off that much. Bonus depreciation, we're going to pick up on that in the book when we get to a book, okay? Okay, all right. Olivia, how about reading number 7 for us? All right, on number 7 then. The answer obviously is yes. Depreciation for real estate is computed. Now, real estate is not land. Using tables that follow the mid-month convention, so depreciation allowed for the year of disposal. The amount of depreciation is computed by taking 1/2 month for the month the asset is sold, plus the number of 4 months held prior to the sale divided by 12 months. Well, let's soak that in. One half of a month's depreciation is allowed in the year of disposal regardless. For example, property disposed of on October 30, table percentage must be multiplied by the fraction 9.5 divided by 12. 9 4 months plus 1/2 month. Now I want you to go to that real estate table, Appendix C. Giorgio's got an orange on it. All right, go to Appendix C. Now go to the real estate table, Appendix 31 years. I told you to mark these the other day. What table is it?
Oh, here. Real property.
I don't know. Go down.
It says real property.
Place service anchor 86. Now that is, that's alternative. I would not want alternative, plus that's business. Right now, let's find personal residential. That's not residential. All right, we find me residential.
Personal property.
Right. All right, Giorgio has finally got it here on C7, residential, right? I'm assuming residential, they can say it up here now. Now I want you to, the amount of depreciation computed by taking 1/2, so plus the amount, okay. That's 1/2 of months. For example, if property is disposed of in October. All right, look at that percent for October. Look at October. What month is that? That month 10 in it. All right. Now, the table percentage must be multiplied by the fraction of, what fraction do you see in October? What fraction do they give you? All right. In October, do they have a fraction? That's the 10th month out of the year. Look at year 2, 3, or 4. It don't matter. What is that decimal?
3.636.
3 point what?
636.
Well, my pen won't write on that one. Three point what, Giorgio?
636.
All right. October is what month?
10.
10 months. Okay. And we were advised to use a 1/2 month. 9 months is September. A 1/2 a month is November over 12. Now multiply that and you've got your fraction. 3.636 times 9.5 over 12. That will give you your depreciation up to the date of sale. Now what fraction do you have?
2.8785.
2.8785. All right. If you were talking about $100,000 bill and that's what you'd multiply it by, you would debit depreciation expense and credit accumulated. And that would be your depreciation up to date before you sell, trade, or dispose of. All right, this one, we can read between the lines. The salesman is incorrect. The maximum amount of 179 and regular is limited to 3,160 in 2017 due to section 280F luxury automobile levy. So we're gonna leave it there. The section 179 is not elected and total depreciation is 5,000. Still would be greater than the maximum luxury car amount. All right, now, where are these tables for luxury cars? They're back there in appendix C2. They're at the end of the depreciation table. Simply didn't find a luxury car. Did you find them all? See what? C6, but they're not at the end, they're not. All right, well, that's not luxury automobile. Here. Okay, it's table what then? Table 6?
Yeah.
All right, what does it say the maximum amount for a luxury automobile is?
160.
For 3160, but how about for 18? And that's what confuses me. Sure, 3160, but did they extend it 2017? I'm sure they did. Okay? Now, I told you what a luxury automobile was. Now, if you rent a vehicle from Enterprise, Avis, Hertz, whoever rents vehicles, okay? And is it luxury vehicle that you usually rent? Compact, mid-size one? No, it has just the essentials on it, no. All right? One thing, they would not get good depreciation. They would be limited on depreciation if they were renting out luxury vehicles. The same thing I said the other day, if you wanted to ride a luxury Cadillac Escalade, four-wheel drive up to your mine site. These coal miners used to do that. They'd get the most expensive GMC Denali, I guess, whatever it is. They saw you get Mercedes, luxury SUVs, right to the mines and appreciate it. Okay, but now some of them didn't ride up to the mine. They had that luxury vehicle for their wife. And they let on like they run it to the mine and they appreciate it when they never use it for business at all. That happens a lot in the mining industry. Okay? Remember that 179, we'll be referring to that over and over. All right, if you lost depreciation prior year, straight line's the best way to do that to keep up with it. Okay? This is alternative depreciation method we preferable because it will give Ron the lower deductions and higher taxable income in years when her marginal tax rate is low. So you want to plan this out with your tax rate also. Now let's look at a couple more of these questions. All right, qualified leasehold improvements can be depreciated over 15 years. All right. So you lease a piece of land. You put a building on it. It's not your building, is it? The landowner owns your building, but you can call that a leasehold improvement and depreciate it for 15 years. Now, if you're leasing a house off someone, you put a new roof on it. You can depreciate over 15 years. That's a leasehold improvement. So lots of different leasehold improvements. All right.
What if a lease agreement gets terminated?
Then you cannot depreciate it.
So
if that lease,
So the land-
that land, you don't own the building, land or nothing.
So the landowner owns the building as well?
The landowner takes it over.
Alright.
Yeah. And whatever he does with it, he can start depreciating. All right. You may use LACRS for business portion of the cost of both assets. Thus, he generally is entitled to claim depreciation on 25,006 of the automobile's cost, 32 times 80. Now, I want you to read number 12 and see how much time he used it for business and how much time he used it for personal. Read problem and question 20.
Hello?
Question 12, yeah. At the end of the chapter, A part.
Your client is a self-employed attorney who is considering the purchase of a 32,000 automobile that will be used 80% of the time for business, and a 4,000 personal computer that will be used 100% of the time for business, but it is located in his home. What depreciation methods and recovery periods may be used under MACs for the automobile and personal computer?
All right. Now that's at page 2 of that depreciation form I showed you. Now, if you have a business return, that program for taxpayer will deduct. Okay? Now I don't know how much money you think we're saying. We did 40 returns the other night. Plus some people didn't return before they got there. Now the average return, H&R Block probably don't charge anything under 200 this year. Let's say the average return was 300. Now H&R Block adds on for all these little Social Security forms, and 1099, and interest, and dividend, double states. If we did 40 returns, average of $300, how much is that? 40 returns, average of 300. 1,200. Now, how much does it cost to e-file returns? Anybody know? Probably, let's say $25. What is $25 times 40 returns?
It's 12,000, that's 1,200. 40 times 300 is 12,000.
It is it. 40 returns.
Times on average of 300.
I was just looking, 3/4 is 12.
12,000.
1,200 would only take care of four repair, four return. Okay, now what is 25 times 40? E-file fee.
1,000.
Add 1,000 on the 12,000.
13,000.
We saved the community 13,000 last night. Now, most of you saw the people you saved money. They needed it. They needed their refund. They were old people. They were poor people. One girl one night was on meth, and one lady last night was on 250. She brought in a return last year where she had $1,000 from Social Security and thought she should have got back money. And I'm sure she worried IRS to death last year. They told her the return was never filed. We told her she didn't meet the income limit to even file a return. She wanted money back. So, ignorant. Now they're all ignorant folks. You were ignorant when you walked into this classroom. So overlook their ignorance. Okay. But when they argue with you, want to know some of the simple stuff, you just have to try to explain it to them. Michael returned that woman's call last night where she had that little over 1,000 Social Security. We were going to look and do an amend return for 2016, but we didn't need to. He called her, explained it to her. She got mad. I told him I hope he hung up on her. And he said he did. So you hang up on people. We're not getting paid. We're doing it for free. If somebody fusses at you, tries to abuse you when you return their call or you call back about a problem, hang up on them. We're not getting paid to put up with their bullshit. Okay? All right. All right, go down and read number 14. look at it.
You want to read it aloud? Read it aloud?
For what?
Do you want to read it aloud?
No, just read it to yourselves all of you. Number 14, thank you. All right, if you've looked at that, Sarah made enough automobile lease payments. Those are expense. You can't depreciate and payments too. However, she must reduce the deduction by at least inclusion amount. That's table 13. This reduction prevents Sarah from avoiding the luxury automobile depreciation limits that apply to purchase vehicles. Her lease payment deduction is computed as follows: $600 a month for 10 months. Now, her lease inclusion amount for table 13 is 65. She does have to take out. So she take 59.35 of lease payments, whereas if she took depreciation, it would be 31 something. She does better by taking the lease. All right. Okay. I tell my grandson, for some of his bad words, to use a substitute word, that he's educated enough to use a substitute word. And I caught myself not using bullcrap or BS, and I used the real word. Sorry about that. Okay, but these people sometimes can make you mad. But still, all right. What we're going to do now, we're going to go up to a lab. Now, Austin, all of yours have been reviewed, but I need all of you to go to lab, even Kevin. I got papers that people's left, and I got envelopes for y'all to make them out, and let's get them in the mail. But we got to clear up some of these little details. Now, Sarah's going to be up there. I'm going to stop recording. So please read chapter 14. Please read chapter 10. Now, on chapter 10, please start doing the even questions. We're going to look at the even questions in chapter 10. And I'm probably going to give you a take-home test by next Thursday. We've got to get a test on 14, 15 in for midterm, but I'll let it be open book. Anything we missed or didn't get to go over, you'll have all weekend to do an open book test. All right?